Hello, welcome back. So Meta reported earnings, the earnings that we were expecting today, and the stock is actually up almost 7% as I'm making this video, and it's about $320, approaching 320. Now, whenever we have these kinds of earnings, I kind of want to see the reaction here. For instance, in stock tweets, you will see a lot of posts here talking about Meta and what is happening. It's always nice to to see the battle between bullish and bearish reactions here. But what we do want to examine, of course, is what happened in the earnings report. Why is the stock up so much? And of course, whether it's still a buy. Because if you have been a long follower of this channel, you may have seen that I have been a long proponent of Meta, and I hold it myself since a while now, and it has done really well. And so if you have been holding for a while, congratulations. Now, if you're new around here and you're thinking of buying Meta, we're gonna take a little bit of a look at the financials, see whether it's a good buy right now. Now, Meta reports better than expected results and issues optimistic guidance for third quarter, so all things looking nice here. But let's see the exact numbers because this always matters, as the stock actually rose about 5% for a while, and then right now it's even higher. Probably because of the guidance as well and a lot of more people getting to know about the results. Now, earnings 2.98 per share versus 2.91, a pretty nice beat over here of about 7 cents. Revenue of 32 billion versus almost 31, again, pretty nice beat over here. And as you'll see, the active users, which obviously pretty important here for Facebook. I have long talked about how many users Facebook has, which is like almost the whole globe, frankly. And so it's already quite a lot, but still, they are seeing a growth, 2.06 versus 2.04 in daily active users because activity is important. And monthly active 3.03 versus 3 billion that was expected. With average revenue, which is probably the most important of these values, 10.63 versus 10.22, meaning that they are making more, they're milking the cow better for their users. Now, revenue increased 11% from a year earlier, which is also fairly nice. If you have been watching my videos, I have been quite conservative, using values like 3%, 5%, 7% in my videos. Now we're looking at 11% for the quarter from a year earlier. So these are pretty solid results here for the quarter. The first time the company has reported double-digit growth since the end of 2021. And again, this was one of the reasons why the company's stock price has been slaughtered for a while. And it allowed for amazing opportunities for those who actually were smart enough to buy it. Now, the company said the revenue in the third quarter will be 32 billion to 34.5 billion. And analysts polled before the report were expecting third quarter sales of 31.3. So as you'll see, both the lower and the upper projections are higher than estimates here. So the suggested growth is at least 15% from a year earlier, which is fantastic, frankly. So pretty nice. As you see, Zuckerberg said that they had a nice quarter, a good quarter, and they continue to see strong engagement across the apps. We have the most exciting roadmap I've seen in a while, with threads and all that, new AI products, and of course you have to talk about AI. Net income rose to 7.79 billion or 2.98 a share, again from the expected 2.91, from 6.69 or 2.46 a share a year earlier. Very nice to see here, pretty nice increase. Now the total costs and expenses 22.61 billion, which is an increase of 10%. Understandably so, when you get a revenue increase, when you get net income increase, you typically get costs to increase and expenses as well. And Zuckerberg has been pushing for Meta to become more efficient, which is obviously one of the core reasons why the stock has been growing recently, and the stock price has been going significantly higher. Bringing down like capital expenditures and things of that sort always help a stock. And for instance, the layoffs that the company had a few quarters ago also really helped the company. Now, total headcount, what I was talking about, declined 14% year over year, and still 71,000 people, which is probably more than enough. But obviously, the Wall Street loves that because it actually reduces expenses and kind of cuts the slack over here and cuts the fluff, I should say, actually. So very nice results here for Meta, looking fairly solid here. And again, people who have bought early, they have made a killing here because if you take a look at the 1 year chart for Meta, you will see some amazing results here. This is absolutely insane how much the company stock price has grown over here. absolutely amazing. Look, take a look at this chart, like insane. It's growing almost every day, and it had a little bit of a decline in the past few days, but still, I mean, growing at a tremendous pace. And if you take a look at the 3 month, you can kind of see it, 6 month as well. It's almost like growing again every day with some smaller exceptions. Very, very strong in terms of growth. And again, tomorrow we're expecting it to be near 320 over here. Fantastic. Now, as I've mentioned in the past, it's becoming a little expensive is the thing. Now, we are already sitting at the 36 P ratio. And again, you had the chance to buy it when it was like 15 at some point, and I was crying for that. And price to free cash flow of 40. And outstanding shares that are going down, which is always nice to see, because if you buy today, you would expect Meta to buy more shares back. We do expect that. So it's going to be a little bit cheaper. But the problem is, again, that the price has grown quite a lot. And tomorrow being almost 10% more, like maybe 7% more or so, it will increase the ratios as well over here. Now, obviously, the results of the company in terms of the growth and everything has been amazingly solid, and the company has pretty awesome margins. Yeah, they have dropped a little bit. We know about this. There has been a little bit of a lacking activity pretty much in advertising recently. It's a well-known thing among Google as well. But again, as I've talked in so many videos in the past, just taking a look at these results here, like for instance, the income statements of Meta, I mean, there's nothing better. Like from 7 billion to 116 billion is a company that's growing at a tremendous pace, at an absolutely tremendous pace. And so it would be insane not to buy when the stock price was that low. What I want to examine though, and kind of let you know about, is the stock evaluator tool for which of course everyone has access here to our tool and everything else that you see that I'm using over here, just by becoming a Patreon at myinvestorsheaven.com if you're interested. But you will see here in our averages that the company has been growing at a pretty solid pace of like 24%, 19%, 37% over here. You can kind of see the revenue growth. The average has been 24%, with only last year being a little bit of slack. But expected. I mean, the company is in the many, many billions right now. So you're going to be seeing slowing growth. And again, in the videos that I was doing in the past, I was using like 3%, 5%. I have even used 0%. And at some point, the company was so cheap that even 0% was fine. So right now, I'm going to go with something that makes more sense based on the results that we are seeing, which is going to be a little bit more offensive and a little bit more aggressive, I should say. But makes sense still. 7, 10, and let's go 12 here. It's probably something closer to what Meta will be achieving, if not doing better actually in the future. And their margins have been suffering lately, but we do not expect them to keep suffering. That's one thing. Because if you see in the past, they have been having like 26%, 33%, 33% again, and then 20%. Their average seems to be somewhere around like 26 to 30, I should say. So this is what I'm going to use. 26 is probably a little bit too conservative. I will go 28. 28, let's go 30 and 32. I think makes a ton of sense here, which the company I think will eventually achieve, because it looks like the 33 to 34 is the average for the most part. And the free cash flow margins, again, 80, 90, 80. So the typical stuff, 80, 90, and 100%. The one that we typically use is what Meta is doing as well. 13% for annual return is the expected rate of return with our discounted cash flow model. And when we hit calculate here, you will see that with these projections, which, yeah, they are more aggressive than normal. Again, in my previous videos, I was using even 0% here, which of course will never happen, but I kind of wanted to prove the point that the stock was super cheap. Now, with 7, 10, and 12, which is fairly normal, and these kinds of margins, which are also fairly normal for Meta, we're sitting at a high of 318, which still surpasses our tomorrow's price almost. We're looking at about, or maybe it's going to be about the same, 318 tomorrow when the market opens. So we are there for high estimates, which are a little bit spicy, but certainly doable. So what is going on here with the company? Way more expensive than what it used to be. Still not as expensive as the other, tech bodies, pretty much, like Google, Microsoft. Google is probably up there, frankly. And somehow I triggered my Google Home here. I had to pause. Okay. So, yeah, what's happening here is that all these companies, the tech companies, are expensive right now, much more expensive than what they used to be. Yet Meta is probably one of the cheaper versions of the tech market right now. So yeah, this has boomed recently, but again, Meta is probably one of the cheaper ones to use. Google is not that expensive as well. Now, Microsoft has been pretty expensive. For example, Amazon, all these have been way, way more expensive. But it's not a stretch to be buying here. But, you know, it's more expensive again. What I said earlier, it's more expensive than what it used to be, certainly. But if you are looking to hold for many years, it's probably still fine at these levels right here. So yeah, that's what's happening with Meta right now. A fantastic company, pretty much, which I think will continue growing through the years and eventually, you know, do much more than what it is right now. It would be amazing to have bought it when it was 80. You had your chances. If you haven't, okay, these things happen. But right now, this is what's going on with the company. A little bit more expensive, fantastic value, great margins, great growth. Still a nice company to buy. Still fair value, I would say. Maybe a little bit more expensive than you would want. But a fantastic company that's overall worth keeping. It's worthwhile keeping for a long time. Thank you for watching, guys. I'll see you in the next video. Bye bye.